Welcome to the Dividend Talk podcast, episode 76. How our early retirement plans look and where we are on the journey. Hey guys, welcome back to another episode of Dividend Talk. This week we're going to have a little chat between ourselves about our retirement plans and whereabouts we are on the journey. We'll answer some questions from the community, look at someone's portfolio, and maybe if we have time, we might give a stock pick. All that and more. See you on the inside. Good evening, European DJ. How are you today?
Really cool. I was really looking forward for the podcast today because I love this topic. I mean, we don't actually talk so much about our own journey from that point of view, right? Usually it's a bit stock driven or such. So it's nice to have a little bit of such a fire chat talk. Is that how you call it in English? Fire chat talk?
Yeah, fire. Yeah, I think that's financial independence, retire early. That's the goal, isn't it? That's the goal.
Yeah, yeah.
It's why we do it. And you're right, we don't talk about it enough, or even at all. So it's a nice light topic, but something I'm looking forward to getting into. But I do have something. I know you have Allianz, don't you, in your
Yeah, yeah,
portfolio?
yeah. I've
Have you
got
s-
Allianz. Yeah.
have you seen the news?
No.
They are giving a commitment, which is always good, to hike their dividends by 5% each year from 2021, which is good as a dividend investor. You know you're going to get a hike for the next. I think it's up to 2024.
Yeah.
So you have 3 years of hikes of at least 5%. How does that make you feel?
From one side, really good. But my retirement plans are based on 6% annual growth. However, the yield on cost is much better here. So I take those 5% any day, any time. Let's just hope that inflation is lower than this in the upcoming years. Yeah. Otherwise, we get Turkish circumstances here with an inflation of 20%. I mean, that would be killing our whole dividend growth plans, right? No, but 5%, Allianz, decent company, still a good price, I think, around 20 euros. So, I mean, yeah, I'm really happy with this. It's nice to hear when companies do this, right? And in Europe, they do this more often. You don't
Yeah,
really hear this in the United States.
yeah, and it gives you that sense of stability. And I have to say, this dividend commitment is does not include. So they're still going to have about 12 billion euros left over, excess capital for share buybacks or acquisitions. So there's still money. You're still going to get value. It might not hit your 6%, but just you're going to get it maybe in your share price going up. So it is. I think it's quite
Nah,
a
it's smart because what they will do then probably they will probably decline the share count by 1.5 to 2% per year.
yeah,
So plus 3% growth in absolute dividends that they need to pay to shareholders. It is really smart, right? So they're paying 5% more dividends, but probably half of that will be almost funded by share buybacks,
yeah.
which is clever, and it just creates a bigger chunk of our how is it rights on the company, let's say, right, as a shareholder.
Yeah, and you have to say European companies do a lot of things right when it comes to dividends. We spoke before about a lower payout ratio threshold, which sometimes doesn't mean they increase it every single year, but it grows steadily. So you know that the company they're not like AT&T, for example, raising it by one shitty cent every quarter just to keep it
Exactly.
a status, and then it goes. So you know that they're good financial sounding. And then stuff like this where they give you a commitment for 3 or 4 years, and at least
Hmm.
I think Red Electric have done something similar, or was it what's the other
Energas, maybe. Yeah.
Energas? Yes, Energas was the company that committed to these dividend. So it's
Yeah.
good. You know, as an investor, you're guaranteed these, and if you're planning 3 and 4, 5 years out, it is always nice to know.
Yeah. So now we're talking about the news of the week. I also want to talk about Hermes International. It's this luxury brand. It's a European dividend aristocrat with 22 years of dividend growth. and it is going to join the Eurostox 50. And we have actually never spoken about the main European index, right? The equivalent of the S&P 500. It's here, or the Dow Jones, let's say, is the Eurostock 50, and it's going to join it. And it's really an interesting story, Hermes, because it's similar to Louis Vuitton as an
Hmm.
example,
Yeah.
and they have been outperforming just their own industry, even like by two, threefold. If you look at the comparison with the industry that they are in and their competitors, so it's really a well executing company. I went to their website today just to see what kind of shit they sell, and oh my god, those book stands that you can use, right?
Yeah.
Two little wooden pieces which look like elephants that you probably could buy at the IKEA. They sell them for 1,000 euros. Yeah,
What?
yeah, exactly. Or you get like such a little planet, but then with the solar system, with the shapes when you look at the sky.
Yeah.
18,000 euros.
Oh man, who's buying this? Who's buying this stuff?
Exactly, or a little orange little bag for your phone to put your mobile phone in with such a cord so that you can hang it around your chest. More than 1,000 euros.
Which,
You buy them for like two euros here in a shop at the corner here in Poland.
so like, are they a big brand? Like,
Yeah,
they're a
yeah,
huge brand, and people are paying
yeah.
this money. This is
They're
this is
going into the Eurostox 50. Yeah,
wow.
so the top 50 companies, let's say, in Europe.
That is crazy. That like, who pays this money? And I'm looking at the website now. Right? If you're earning 1,000 euro for a bag, you could do a better job on your bloody website. It's horrible.
Yeah, it's really bad. But they pay good dividends. Yes, so as long as there are enough people that buy this stuff, you know, dividend will continue to grow. So I would like to have this company. It's just always too expensive.
Yeah,
But it's a really nice French company, I would say. Fast growing company, really. So yeah, it's I find it really interesting that such a company is joining such an index, such a luxury brand.
yeah. So have they only paid dividends since 2016, as far as I can see.
No, no, 22 years. They are a
Go away.
dividend aristocrat in the Noble
Oh,
30 index.
oh,
Yeah, no, this is one of those pure play dividend growers in Europe.
that's pretty cool actually. I just looking on the website, it only has initially. You probably have to dig in back as far as 2016, but in 2017 they paid a special dividend, or an extraordinary dividend, as they called it, of €5. So you got €9 dividend off them in 2017.
Yeah, yeah, that's a very nice company, but their product line, I mean, I would not even dare to step in the shop, and I would be afraid to touch something that will fall off or something like that.
I just replace it with something out of Primark or
Yeah,
something.
exactly, or from the Action. Yeah. But those are real dividend investors, right? We will buy at the Action this stuff.
Yeah, exactly. Wow. No, that's quite a nice topic. And see, do you know what? It's a company that has escaped my radar, but I'm going to look into them a little bit more. I'm sure you'll probably get a video well before I look into these, but
No, no, no. It's not in my on my radar further, but yeah, I would say it is really, I think, a nice company to look into. It
mm,
is really this French style. Also, if you already go to the website, so
yeah,
yeah. So maybe it's time then to talk about our journey because we started to touch on that already a little bit.
yeah. Our retirement plans, where we are, how we're going to get there. Let's start with you. What is your retirement plan? What's your ultimate goal here?
My ultimate goal is just to have more freedom. Yeah, and freedom for me means freedom in time, because honestly, I think with the fact that I'm already dividend investing, I already have the freedom of thoughts. And what I mean with the freedom of thoughts is I already have a cushion that I can, based on my portfolio, if I would really get in trouble, I can probably live 5, 6 years just off the portfolio alone. So I have already this freedom in thinking that I can really do only stuff that I really like. So at work as well, I don't need to do things in my mind that I don't like. Of course, there's no perfect work where you always, have a day that you feel like what I'm doing here. But it liberates me so much, right? This freedom of thinking. So what I'm really now still trying to achieve is freedom of time. I don't have that yet. And freedom of time means more like that I really own my day. And I don't own my day yet. And for me, this is mentally really important. So it doesn't mean necessarily that I would stop working. I might work less. I might work different. I might work in charity form rather
Yeah,
than a paid job. But this freedom and time is really important for me, and I'm missing that. I feel more like I'm in a rat race, also with two kids. This Groundhog Day more I feel during the week,
yeah.
and this is what I'm trying to get rid of in
Do
time.
you get the sense? Because my answer would be something similar. You might guess that engineer my freedom, but do you ever feel like there's more to life, or you're missing out because you're stuck in work all the time?
Yes,
I always
yes, I
have that
have this
feeling.
feeling. I have this feeling, and for instance, one of these things where it really comes becomes present is that I love Europe. Actually, I love traveling. I love
Mm,
city trips, but I don't like them just for a weekend and to get drunk or something like that. My dream is to buy such a Eurorail ticket
yeah,
and just take 3 months, go to all the cities, buy the local city guides, explore the towns, get a feeling of life. Europe is so beautiful, and I'm not talking only about West Europe. I'm also talking about Central Europe, Budapest, Prague, even Romania, right? Bulgaria, Slovenia. Every time we drive to Croatia, and we drive to Slovenia, it looks so beautiful, right? So spending time through those countries and being a tourist, but also getting a bit of that life, that's really what I feel like I'm missing in life. And it's
yeah.
just really hard. Really need to take a sabbatical to be able to do that. And yeah,
Yeah, I agree. It's hard to get a sense of a different culture in a weekend where you're probably going to spend 20-30% of that sitting in a pub. You're not
yeah,
going to do that. You need to get out, explore, get away from the tourist parts. I mean, the
yeah,
tourist parts, you see what they want you to see, and everyone's airy fairy, but
yeah,
you need to get out of that and actually get to meet real people to get a flavor of it. And
yeah,
that's my ultimate goal, is just to have that freedom. I love traveling, and this pandemic has been an absolute nightmare. Like I usually travel
yeah,
3-4 times a year. Holidays, I think I got away once last year, and that was it. That's been it, really.
yeah.
So I'm really looking forward to get back traveling. But my goal would be to not have to worry about work. I could have enough money to
Exactly.
to to, to travel and do what I have to do.
Yeah. And then how is your wife thinking about this? Is it similar for her?
Yeah, yeah. Now, we're in a privileged position. We managed to retire my wife. I think I spoke about this before. I mentioned it on Twitter. So the goal was in a couple of stages. Retire my wife first, because look, she's fantastic. She's a lot better around the house and organizing, getting kids ready. She enjoys all that. So get her out of work. Successfully did that. So we're only living on my income, and the next part of it now is for me to retire, and then we can both travel together. She loves it just as much as me. She would never live somewhere else.
Hmm.
She's got a really, really close family, but she loves traveling, and so she would more than happy go somewhere for a month at a time. Once she knows we're coming back.
Nice, nice, nice. So where are you now then on the journey already?
So I am about 9% there at the moment, according to my dashboard. It's probably, do you know what? It's probably a little bit more, because I'm only taking into consideration dividend income on that.
Yeah,
I do earn more on the side, so I write for sure dividend, for example. That's extra income that comes in. I have my option trading account. I'm paying off my mortgage at a ferocious rate these last couple of years. So adding these all up together, I'm probably closer to maybe 15-16% there,
yeah.
which is
That's
which is quite cool. I believe that I will get there by the time I'm in my fourth decade, so I'll be early 40s. I should reach my goal.
Yeah, so I'm 40, just for your information. So I still have quite some time to go. But this is really cool because you just started like 2, 3 years ago, right?
Yeah, yeah. Start
And
start
that's
start
amazing.
start a couple of years ago, but I mean, in the beginning, I started with such low amounts and just built
Hmm.
up confidence, and now I have complete confidence in what I'm doing. I've no problem putting extra money in. I still have an emergency fund there if shit hits the fan,
Hmm.
because family first, yeah. So you got to make
Yeah,
sure your kids are looked after. If something happens, which may or may not happen, you have something to fall back on, and then everything extra. So I'm literally putting everything extra into either my dividend income account, option account, or paying down my mortgage. I,
nice.
I I I live a simple kind of life now. Really, I mean, I don't
Yeah.
don't really need to do that, and can't travel, so I.
You're just, that's really funny when I hear you talking. You're like a CEO, a capital allocator. Yeah, you get your cash flow. And what can you do with your cash flow typically? You can buy companies, you can pay dividends, you can buy back shares, you can reinvest in the company. And probably there's still, I think, a fifth category. You're doing something like that. You're buying back shares when you think about your mortgage. Yeah, you're
but
effectively doing all of this.
but at the moment, it comes with a price, and that price is my time. And I spent
Yes.
and we've delayed this podcast tonight because I'm on call on work, so I was still working. I finished work physically there about 5 o'clock,
Yeah.
get the kids ready. I was writing some articles for sure Dividend, and then I get a call about 7 o'clock, and I'm on call for 3 4 hours, and then
Yeah.
I'm late. So there is a price there, and that price is my time. So that's where my goal is. I want to free up
Hmm.
that time, so
Yeah.
I don't have to be on call, or I don't have to be in work. I can just write
Yeah.
articles or.
But have you ever considered just to think like, okay, if I'm at 20%, I will take a day less at work. Like I start working 4 days and the other days paid by dividends. Have you considered such things?
No, no. Do you know what? My personality is really all or nothing. And
Yeah, I have
I
the
and
same.
in work, I mean, I'm in my time. So I'm really a project engineer. So we bring in big like big equipment. It just so happens that the project we're on now is huge. It's massive. We're bringing in a whole new process, which takes a lot of time, and it's not something I could do part time or even 4 days or 3 days. I have to
Yeah.
be there all the time, and I have. I don't know if I've mentioned this before, but I have grown quite quickly in the company. I've got a couple of
Hmm.
promotions, and work has been acknowledged. So it's been quite nice. But I get that because I'm so dedicated. I mean,
Yeah.
I don't have to take that call that I took for 3 hours, but I will do it because it's my project. I want to make sure it's fine, and I'm dedicated. But eventually, I'll get to a point where I'd have enough. But
Yeah.
I can't just do it half-assed. I'll have to either walk away altogether or stay. I can't
Yeah.
just do 4 days or 3 days.
I have the same. I really would love to. I would like to have a Father's Day every Friday, for instance. But and even I spoke about at work; they are open to that. But I just noticed I'm a workaholic. You know,
Yeah,
in the end, I don't even burn my vacation days on a year just because I have overtime. So I don't. I can sometimes compensate, which always leaves me with days in the end of the year. And I've been burning so many vacation days this year, and still I didn't make it. Yeah. So it was not like I didn't have vacation this year, quite a lot.
yeah.
But yeah.
So I have a question for you, which is interesting. So we're always quite busy, and we're content creators. You have blogs, podcasts, you have YouTube as well, and we're talking about our goal is time, and we want time with our families, but that's in the future. How do you
Mhm.
manage that time now with your family, with everything you do?
uh, well, the pandemic helps. So I'm much more home. I'm not so much on travel. I must tell you, in 2019, I spent probably out of 50, what is it, 52 weeks, 54 weeks, I spent 20 weeks abroad. So I wouldn't have been able to do in such a situation all this stuff that I'm doing now. But it's really simple. I know my wife already for what is it, 18 years now. So it's not like we are in the first year and still need to understand each other. So I've got my set times. I'm a time box. So Friday evening, she knows I'm doing podcast. Sunday morning, she knows I'm doing a video. And once an evening during the week, I'm working on a post. And every day I spend half an hour or something like that on social media. That's sometimes in the morning when I wake up, and then in the evening when the kids are busy or to bed. So actually, I try to do a lot of this when I'm not needed, let's say
Yeah,
like that, because on Sunday morning they often go somewhere. And so this is why I can manage it quite well. But time boxing is really, really important here. And that's why sometimes I don't make it to finish a post during the week, and then I just move it to the next week because still my family has priority. So actually, I can juggle it quite well. The issue is when I have business trips, that makes it really hard because that means long days, hardly any sleep for me, and yeah, then I don't really have time for this. So and then it's just prioritization, right?
yeah, yeah. No, I agree. 'Cause it's something that I get asked quite a bit, particularly from guys that are trying to get into maybe blogging and they see how much time it takes to write just one post.
Yeah,
Let alone write them every Sunday or every week for 2 or 3 years, which is a huge time commitment. But I think you're right. I think prioritization is key, and I make a point of never missing any of my son's training matches
exactly,
or training or
exactly.
matches, no matter what work podcast,
Yeah,
anything weights. I go to that first, and they have that time. And in the evenings on the weekend, I give them time as well. But like you, I do most of my stuff at night when
yeah,
when my wife is watching the worst shit you can think about on the TV. But
yeah,
she enjoys watches that. I'll sit there. We'll have tea together. Happily sit there on the laptop. We can
yeah,
talk, but I don't need to. I don't need to be totally present. I can type away, and if we have something to talk
yeah,
about. But
exactly. And
it's
then
nice.
where are you now then with your savings rate? Because I think the savings rate for many people is really to get to early retirement is probably in the first 4 or 5 years even more important,
Mm.
the savings rate, than the dividend income and dividend reinvestment. So how are you doing on that one? And how did you get to the point of where you are now with your savings rate?
Yeah, savings rate is not something I actively track, but if I was to look at it, it's quite high actually. What it would be if I include paying off the mortgage and what I invest, and then what we save for like holidays here, and we have separate different accounts. So I actually read a book, and my wife doesn't really like finance books, and she's not into that at all. But I don't know if you've heard of the Barefoot Investor.
No.
He's an Australian guy. The book is brilliant. It is in plain English that anybody, even if you have no interest in finance, it, it would really get you like involved. And I asked my wife to read it. I pestered her to read it really, and it took a while, but she read it from start to finish, and she loved it. And he talks about setting up different accounts. You have a Smile account that you can use for, I don't know, treats and all these
Hmm.
different accounts. And she actually went off and set up all these accounts. And not only that, right? And that's amazing. She has all her friends doing the same now, but she's excited telling them, and she's just
Yeah.
getting involved. And look, she might not be investing, but this is her way. This is her way
Yeah.
of getting involved. And all, like, I never have to, when we're going on holidays, I never have to worry about, do we need extra money, because she has this account. She tells me how much we put in every week, and we go on holidays. There's money there, and she looks after that. She looks after the bills, and she has her own money to her own thing. So, but I think it's really good to do that. But in terms of saving rate, I don't track it. I really don't. I just pay. I have a set amount that goes into my investment account. We pay off as much as we can off the mortgage, and then we have fun. Now, if we have stuff on, like if we want to go for dinner, nights out,
Yeah.
weddings, we obviously won't pay off them as much off the mortgage, so it
Mhm.
won't matter. So it will fluctuate, but I would
Yeah.
say I would say we save at least 40%, but it's probably upwards of 60. I would say.
Yeah. Wow, that's really really amazing.
Mm. But honestly, we live such simple life. Like I can't understand. Right? We have people, we have friends, we have family that make a lot more money, and we know they do than what we do, right? And they're always broke, and I just don't understand what they're doing with the money. I really don't.
Well, I
It's really
think they are probably using products from some of the dividend aristocrats and such, right? Because they
buying
are
bags
able.
off Hermes or
Yeah, exactly, and that allows us to pay dividends. Think about credit card debt and everything. Once
mm,
you get into this cycle, it's really hard to break from away from it, and a lot of money leaks away back into high interest, right? Cars as well. I mean, for me, a car, we have two at home. I
yeah,
bought them once cash. My own car is now almost 10 years old. I will drive another 10 years with it. Hardly any maintenance required for this car.
yeah,
So as long as it continues to drive, I don't mind being the idiot with the oldest car on the street. Yeah. So, I always say, as long as it looks good from the inside, it's fine enough because I don't see the outside when I'm driving.
yeah. No, I agree. We've one car, and actually, now you say it, all my friends have two cars, and they have new cars or SUVs
Yeah,
or
yeah,
and big cars. We have one we paid for it in cash, bought it
yeah,
last year after we had the one before that we drove for 10 years, drove it into the ground. We'll do the
yeah.
same with this one. We'll just keep driving it until it
Exactly,
stops.
exactly. The same for us. It's the only asset that has continuous depreciation. All the rest that I typically have in high value, like a house, like my wife, it's all appreciating assets, right? So
And what's your savings rate like? Is it
my savings rate, I will do the math at the end of the year, right?
yeah,
Last year, I think it was around 57%. I got some salary increasement at the end of quarter one, plus some additional. So I think I'm above 60% at the moment. But it will go down, I think, per January, because in Poland they're introducing new tax law. And I calculated that I will get 8% less income
wow,
per January, and lower income people will have a lot tax free. So they are really shifting some wealth from the higher earners to the low earners. So yeah, that will have quite some impact, I think, on my savings rate if nothing happens from a company point of view.
yeah,
Yeah.
that's quite a decrease in 8% in 1 year. They usually gradually build you up to that amount, not
Yeah, no,
one
they're
swoop.
doing it quite, also quite effective. I mean, honestly, I think they're doing the right things. Yeah,
Yeah,
because there is a wealth gap here in this country. If you're at the bottom of society, it's poverty, in my opinion.
yeah,
So it is good that they do things. I think many people don't like it in Poland because it's driven by a certain Catholic uh, political nature behind it. For instance, if you have four kids, you get really lots of benefits, and there's a strong incentive in making kids in this country. So, there's a lot of polarization here in politics, but generally, I'm supportive to getting these people into better conditions because it might also reduce the pollution here and these kinds of things if you make the bottom more wealthier.
yeah. And right, okay, we spoke about our retirement plans and freedom. We both have young families. Have you considered, is that in your plans, like putting your kids through college, for example? I don't know how expensive it is in
Yeah, it's
Poland,
not
but
expensive here, but my son just turned 10 and he told me he wants to go to Harvard. So I told him, well, he needs to pay for it mostly himself. So he asked me how he could do it. I said, well, think about it. And then he came to me that he wants to start a YouTube channel with 1 million subscribers and about Minecraft. So he started to work on that. He has 8 subscribers now. So he's on the path.
he has ambition. I'll give him that much. But
Yeah, exactly, exactly. So let's see if he will still wants to go to Harvard at the time. It's not something I'm supportive of because of the pricing there.
mm,
But if he wants to go to a business school, I will be supportive, of
yeah,
course.
yeah. So,
Yeah,
you know what we did with our kids? We set up a brokerage account for them. They pick shares and companies, and they're going to use
yeah,
that as their college fund. My oldest son doesn't. He said he doesn't want to go to college. He wants to set up his own business and do whatever. But
yeah,
I mean, he's 11 now. A lot can change
yeah,
in that time. So we'll be supportive, but we really want them to feel like they've done it themselves, even if
yeah,
even if even if we're in behind supplying the money into that account
yeah,
for them. he's going to feel like he's done it himself. And I think that's important that they understand
Yeah,
what it is, understand the money, and then maybe direct their own path to their own financial freedom. Hopefully, he's probably retired before I am. That would be my
that would be
ultimate
really
goal.
cool.
Yeah,
Nice, nice. So, and how many years do you still estimate? You mentioned somewhere in your 40s. What does that mean for you? Like 10 years, 15 years?
I'm not that young, no. It is about maybe 7, 8 years, I think. So
Okay.
7, 8 years.
So that's really cool. So for me, it's also around that 6, 7, but I'm saying already like for 2 years, 6, 7 years. So
Yeah,
maybe for me, a lot depends also on some other things. Here, for instance, I'm considering also maybe to do such what they call barista fire. Why not stop after 3, 4 years and just do some Uber driving or something like that, 2, 3 days a week, maybe some contracting. And with my knowledge, I could also do some contracting for 2 days a week and
yeah, but
get the cash.
knowing you like I do, you're passionate about your work. Do you really see yourself giving that up to be an Uber driver or a part-time?
I could be a really passionate Uber driver. I could talk to everyone about dividend stocks, even when they are totally drunk in the car on a Saturday night. I would say, like, hey, guy, you could have all these beers for free forever if you would start focusing on passive income.
buy, buy Diageo and stop going out to the pub.
Exactly, exactly. No, but I'm considering that. But to your point, I will never sit quiet. It's not in me.
Yeah,
Probably if I would work 2 days, the other 3 days I would be blogging. It's simple like that.
yeah,
Yeah,
yeah. No, that's good. I just think I would struggle with something like that. I would have to be passionate about it. Now, I've I've owned a coffee shop before and I loved it. I would not mind doing something like that again. But I don't know if I could go in. I don't mean disrespect anybody here, but in a low end job like that and just do 2 or 3 days because it would bore me senseless, I think.
yeah, you might be right. I read more often from people that reached fire that was one of the biggest things that they were dreaming about it, and then in the end, reality kicked in, and they went back to work again or something like that.
Yeah, I mean, you make lots of friends in work, don't you? That's where
Yeah,
your interactions are the whole time. And it would be great if I reach fire and all my friends and family reach fire at the same time, because now I have this group of people around me that I want to be around. But in reality, these groups of people are going to be off living and working because they have to work,
yeah,
and you're going to be in fire on your own in your own little circle. So I think it's important
yeah,
to have something. I just don't know if it could be. It would have to be something that pushes me. If it doesn't
yeah.
push me,
Exactly.
I just lose interest.
Yeah, yeah. No, same here. Same here. Okay, cool. So, really interesting to hear you talking a little bit about it, and fingers crossed that you will make it also in 6, 7 years. And I was thinking when you said I retired my wife, I don't know a blogger yet that has the name "Retire My Wife." It would be an awesome blog, retiremywife.com, right?
Yeah, I have to change everything, change my whole branding to retire my
Yeah,
wife.
retire. But you did it already.
Or RTW. It won't be EMF, it'll be RTW.
Yeah,
Or M
RTW.
or MW.
Yeah.
Not not retire dead wife. Retire my wife.
Good, good, good. Well, also to the listeners, if you have sometimes questions around our journey or something like that, just let us know. We might pick it more up in one of the upcoming shows. Again, there's still so much that we didn't talk about that we could talk about regarding our plans. So just let us know if there are other interest areas that you have here, and we could get back to this topic again in the upcoming show. Um, EMF, I think we need to now speed up a little bit to still keep the show somehow under an hour. We still have some questions out there, quite some. And we have also a portfolio review this week. And
Yeah,
this week we got a portfolio submitted by Anders Storgaard. It sounds from a Scandinavian country.
yeah,
Um, he's saying that he's been investing for 2.5 years and he has now around 100,000 euro portfolio. His strategy is to create passive income portfolio, providing cash flow to cover his fixed monthly expenses, like we have as well, right?
yeah,
And he has a satellite portfolio combined with some alternative investments plus cash. He has a breakdown as follows: 10% in cash, so he's from Denmark, Danish crowns. 35% in some ETFs like IUSQ ticker, and yes, also he's also tracking, and I think this is the one, the MSCI da 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 da.
Yeah.
Yes, another third in individual dividend stocks, and he took the screenshot beside, so we can speak about this one. Then he has 10% in crowd lending, real estate loans in Scandinavia, and 10% in crowd lending, consumer loans in Balticum, Europe. So then his top 5 of stocks are Bristol Myers with a portfolio allocation of 9%, Vici with a portfolio allocation of almost 8%. Then the ticker symbol PBA. I actually don't know what it stands for, so let's look that quickly up. Then also ticker TSN, and then BTI, British American Tobacco, and they are all around 7 to 6.5%. Number 6, maybe, which is really interesting, is HPQ as well. So when you're looking at this portfolio, what are the first things that come to mind?
I mean, just even before looking at the portfolio, his allocation is quite defined, isn't it? And this guy, Andres, knows exactly what he's doing. He's not put all his eggs in one basket, which is when you read the books, this is what they tell you to do. And I think it's really good. He's got a lot in real estate, crowd lending. It's something I've tried before. I wasn't too comfortable with. I know there's risks in that. I'd much rather buy REITs, for example, but they can work and they do pay out some good returns. ETFs, which, as we said, we recommend for most people if you don't want the individual stocks, and having money and cash on the side is essential. So I think he's got a really, really nice plan, and that looks really good. In terms of his portfolio, there's some names there that I do like. Bristol Myers, obviously. Vici is a property group, I believe. It's like a REIT.
Las
PBA.
Vegas.
Um, PBA is, I don't know them either, but it's Pembina Pipeline Corporation. I look,
It's a really a high yielder.
yeah, but it's oil and gas. It has,
Yeah.
but looking at it, it's oil and gas, maybe infrastructure around that, so you can see why. And then BTI thrown in the top, which is another high yielder. So there's a lot of high yielders in these top couple of positions. But even though they're high yield, I don't see any real risks with them. I know British tobacco, it's a declining market, but I think it's a really, really nice
Really good
top.
value play.
Yeah, I think so. And looking at some of his other companies, he's got Intel. I know you're not a fan, but uh, I think
Well, that's not what I'm actually.
you're turning.
I'm.
You're
I'm.
turning.
Yeah, I was not a fan with the former CEO, but what the
Yeah.
new CEO is doing, I really like this guy. So I wouldn't be surprised if I become an owner in 2022 at the right price.
Oh, we'll see. We'll see how that one goes.
Yeah.
He's also got CVS, which is a competitor
Hmm.
to Walgreens, and honestly, I think CVS is another really good company. The only problem for me and why I pick Walgreens is they have a static dividend. Um, they are trying to pay down debt first, and then when they get that, they'll probably start raising the dividend again. But it's a really nice company. They
Yeah.
got realty income again. Who doesn't have realty income in
Yeah.
their top? I think it's a really nice, thought out, spread out portfolio. HPQ interested you a little bit.
Yeah, HPQ. I mean, this is a stock that people think about still about faxes, fax machines, and everything. And this stock is just killing it over the last weeks. It was so undervalued. I was actually eyeing it. I wanted to maybe enter a position there because
Yeah,
of mainly because of undervaluation, but it started to pop already. Also, a massive dividend hike, I think, last week. So yeah, this was a really nice pick from him. And I'm sure he got it before there. So this stock is really doing well for him. Generally, I really like his portfolio. I like his diversity across asset classes. He was also on Facebook. He got some questions on the crowd lending part, so he clarified a little bit there that he's also leaving Mintos and maybe reduce a little bit the real estate crowd lending there. I like his portfolio also a lot. I'm missing a little bit more like dividend aristocrats in here, but okay, I think he has some with Johnson Johnson as well. I'm just missing some of those reliable classic dividend growers. Yeah, because with some of these, for instance, with PBA, the pipeline company, we know that such a toll gate system is not a given, right? When there is an oil shortage, and you might get some dividend cuts here. Um, Even though I think actually that the risk of dividend cuts is rather low in this portfolio if you take the portfolio as a whole. Yeah. What I'm just missing is European companies. He's from Denmark. No, how you say it? Novo Nordisk in there or something like that. High grower, also dividend wise, really solid companies. So I'm just missing some European companies because this is all US dollar dominated. And I don't know if I think about the next 10, 20 years, the strength of the US dollar, China now being the biggest economy in the world. I'm not so bullish on the US dollar from that one. Also, the US dollar is really connected to the oil price. If in the next 10, 20 years, oil becomes less important somehow to society, then yeah, I don't know what it does to the dollar. And if you're then 100% in dollars, I mean, if this is supposed to be a long term portfolio, I personally would also diversify a little bit more in currency here, but it might already be via the crowd lending and such that he has more euros in there, the ETFs.
If you were to pick one European company to fit in there, who would you pick?
So I'm not looking at valuation, just assume that this stock will be in the right value in the upcoming year. I would pick Novo Nordisk just because it's Danish, close to his house, and it's a rock solid, really great company. I would really try to catch that one. Yeah, Novo Nordisk.
Castellum looks like it would fit in there as well. He
Oh,
seems
yes.
to like a lot of REITs, and even Fresenius is probably another one.
Fresenius, yeah,
Might be another
will
one.
fit in there.
Just looking at the structure of what he has, they might fit in nice. But no, I'm impressed. It's a nice portfolio, but I'm even more impressed by his actual laid out goals and how he has everything laid out. I think that's
Yeah,
really
he will
important.
get there quicker than he thinks.
He's getting there quicker than me. He's 2.5 years
Yeah.
in, and he's flying. It's good
Yeah,
stuff.
exactly. So well done, Anders. I don't think we could share a lot of new stuff with you, but I hope even just a confirmation is already really helpful for you that you're on the right track. So thanks, Anders, for submitting. If there are others that also would like to have us look a little bit into their portfolio, just drop us a note on Facebook or on Twitter or via email, and we'll consider it for the next show. So let's go quickly to the listeners' questions. We need to do a lightning round, looking at the time. The first question is from Manny Mystery, and he is asking whether we look also at the metric when analyzing companies of return on invested capital, and specifically in combination with the weighted average cost of capital.
Yeah, I think you do that, don't you? Looking at
Yeah.
your videos, you put a lot of
Yeah.
importance on that.
For me, the gap between the return on investment capital and the cost of capital is for me the value gap. So you want to see that the return on invested capital is more than what capital actually costs. Yeah, because if you're lending money to invest and you make less return on what your interest rate on the money costs, you're not doing well as a business. There's one catch though here that I want people to be aware of. Let's assume that a weighted average cost of capital is on average now 6-7%. But if you're a company like Microsoft and you have hardly any debt, because debt is almost at zero cost now, then you're mainly, I said, dependent on the other part of what defines the weighted average cost of capital, and that's the shareholder expectations. Yeah, because they have a certain expectation regarding return that they want to see from the company. So let's assume you're Microsoft and shareholders expect a 15% annual return, then your weighted average cost of capital might be 12%. And if you're then having a return on capital also of 12%, it looks like you're not making money. Yeah. So there's a catch to it that I find the WACC not so significant or important when we're talking about high growth companies that hardly have any debt on their balance sheet. Yeah, so it is not. It's a good back on the napkin approach, but you also need to look a little bit behind it, what those figures are made out of.
Okay, lovely short answer. The next question is from Sly Badger, and he's saying, when you're looking at a business, what are your non-negotiables? Not talking about a dying business, but generally things like debt too high, dishonest management, etc.
Yeah, dishonest management is something that really turns me off. So, for instance, when people started to talk about adjusted classic free cash flow and these kinds of, I know some companies do it. I think even Fresenius, but I really don't like it. It really turns me off, and so dishonest management. I see that as dishonest management. How about yourself?
Yeah, it'd be similar. Now it's probably debt too high as well as dishonest management. But honestly, these things can turn around. Management can change, so it's only in a snapshot period of time. Uh, but something like IBM, for example, when you're looking at this constant changing the narrative each and every year and nothing adds up, I just don't get it. AT&T are slightly like that in terms of you look at their debt profile. The depth is too high, but then I think myself and Dividend Wave have spent lots of time going through when they release how much debt they play, how much debt they've paid down, and it never adds up. And it should be easy to find that, not hard. So, but honestly, I don't know if they're not non-negotiables. I think every company can change or
Yeah,
turn. So
exactly.
I, there's once
Okay,
there's money to be made, I'm there.
exactly. So next question is from Future Dividends. He's asking whether we are thinking about buying the dip on some beaten up growth stocks.
No, not at this moment. I haven't really looked at, to be honest with you. Most of my capital is tied up on my option plays, which I think I discussed last week. But there is lots of good opportunities out there now, though, I would imagine.
Yeah, so me neither. Me neither. It's I've got Alibaba maxed out, so not intending to buy any other growth stocks. Then the next question from Maarten is similar to that. He asked whether you have considered Tencent in general as an investment. No.
No,
Sorry,
no.
Maarten. We didn't. Next question is from Phil, and he asks, which dividend payout frequency do we prefer the most? Yearly, bi-yearly, quarterly, or monthly?
Monthly.
Me too. I would love it monthly, although I would take quarterly also for European companies.
Yeah, but I don't mind yearly either because you get a huge chunk at once. But if you could spread that out like every month from different companies,
Yeah,
and
that would be really nice.
that would be
Yeah,
really nice. I know you've done a blog post on this before, or something where you've laid
yeah,
out how to get paid every month from European
yeah,
companies.
exactly. Dividend Wave is asking what you have on your watch list for December.
Just whatever's in my portfolio. I'm not looking at anyone new. Fresenius is a company that I have a low allocation in that looks like it could go. Texas Instruments is someone I'm always open to add to. And maybe can't think of any more. But
So EMF,
certainly those two stuck out to me last week.
I bought Fresenius last Friday, and I'm really happy with it. It's a really
Yeah,
good price now.
I,
Really
I,
good
I
price.
remember you saying that. So I bought a starter position in them when you did that show with Phil.
Yeah,
So I bought a couple of shares. I think it was up around $40, €40 at the time, but now they're dropping down around 30, and it's definitely
yeah.
within a more viable range. So they are on my watch list. But at the moment, this time of year, I'm probably just looking within my portfolio. I'm not looking to add anything particularly
Yeah.
new.
Okay, so the next question is from Thiago. He's asking us about Baba, specifically now that the delisting and the V regulatory threats have become more apparent. Has it changed our thesis for Alibaba?
I mean, Alibaba's business, right? It's business. Let's not look at anything else. It's
Yeah,
business is fundamentally sound, right? And I know what he's talking about, the VIE and all this kind of thing, but as a company, it's making lots of money and it's growing in the right direction. There's stuff in China that happens that's out of our control, but there's stuff that happens in Europe, there's stuff that happens in America, there's stuff happens everywhere. I think it is incredibly cheap at the moment. I have a put on them, so I will be obligated to buy 100 shares if I get assigned. I don't think I will, but it could happen. They could go as low as $80 easily. I think the way
Yeah,
it's falling. But my opinion has not changed. I knew the risks when I was taking that bet, and I mean, I always find this when you have a thesis or when you have an opinion about a company and it's going right for you. It's easy to say it's going right and the company's on its way down, but normally that's the time to buy a company, isn't it? Because
exactly, exactly.
because I think they will turn around. It might not be apparent, even if they are delisted. It doesn't mean they can't. Their share price on the Hong Kong exchange, for example, can't
Yeah.
go back up.
Exactly. For me, the same. Nothing has changed to my thesis. I see this as a risk. I see it still not as an issue like you. For me, it lies for 3 years on the shelf. I have maxed out my position already on Baba. I will not be buying more. In 2024, I will look back at it and then I will see what it has done by then. And I expect it to be around 250, $300 at that moment in time. I've done really well in the past buying beaten down stocks like this, where there's fear in the market. Same with Facebook at the time. Same with Apple. iPhone is dead. I know these are regulatory risks at the moment. Yeah, so I understand that it scares the hell out of people. It can happen,
Oil
but that's
stocks are
why.
dead. No?
Yeah, and it can happen. And if it happens, look, it's 3.5% or something like that of my portfolio. My portfolio went up more than I think 20% or something like this in a year. So I wouldn't even notice in the end. Then I would just take my learnings and move on. So
Yeah,
yeah.
and that's it. Analyze your risk, and if you're happy, stick with it.
Exactly.
Yeah.
Exactly.
Okay, thanks, Thiago.
Quick question from Kai. He's aiming for retirement in 20 years. What payout ratio, dividend growth, and yield would my dividend stocks have today?
Oh, that's a hard question.
I think it's not the right question, Kai, sorry to say, because payout ratio is not really relevant for your retirement in 20 years. If you're asking what your stock screener should show and which companies should have like a margin of safety, yeah, you want to have in general the lowest payout ratio, still the highest yield, and you would like to have super duper dividend growth. What I can say, Kai, what I will do on Twitter, I will just reply my retirement calculator to you. Use this Google Sheet. You can calculate yourself what you need to be able to retire in 20 years. In general, I can say if you're able to save 50% of your money invested in dividend stocks with a yield of 3.25%, at an annual dividend growth of 6%, you will be able to financially retire and cover your expenses in 15 years. So that's the math, and this should help you.
Cool. Wolf of Harcourt Street has asked us, are we buying any dips this week? And I love that gift that he's posted.
Yeah, I bought Bristol Myers on Monday
Oh,
at $55. I'm really building nicely a position into Bristol Myers at the moment. I'm really enjoying this stock, and if it dips to 50, I might buy some more.
sweet. And Dermot is the last question. And he said, thanks for your feedback last week. Given the current plunge in growth stocks, are there now any on top of your watch list due to lower valuations? I think this was similar to
Yeah,
one we got
no,
before.
no.
Okay. But it doesn't mean it's not a good time to buy growth stocks. It probably is. We're just probably not the two guys to tell you.
Exactly. Good. EMF. A long show, but I really, really enjoyed this one. And I know we talk a lot even about our journey and still learned some new stuff today. So thank you so much for this.
Yeah, hey, do you know what? It didn't actually feel that long for me, but for our listeners, I'm sorry if it is too long. I know sometimes we get people telling us it's not long enough or it's too long. I mean, I don't know what the right length is, but all I know is I really enjoyed talking to you about this today. I had great fun, and as you said, you learn a lot. And look, it's good to have a nice, relaxing topic sometimes. I know we can get deep into numbers, we can get deep into earnings and stock picks and all this. So this was a nice relaxing one, and I probably need it because my brain was frazzled today before here. So
Well, then all I can say is I wish you a great weekend. Don't think too much. Don't use too much alcohol either. It kills your brains. And see you next week again.
see you next week, and thanks to all our listeners, and see you on the outside.